In his last day as Finance Minister, Pranab Mukherjee's parting shot is loosening of norms so that the government can tap NRIs to boost its dollars reserves. The dollar magnet is basically a multi-pronged strategy to hike investment limits set for the foreign investors. Mukherjee met the RBI governor today and the new guidelines are likely to be issued shortly. The RBI has decided to enhance investments by filling in government securities by $5 billion, bringing it up to $20 billion overall. Qualified foreign entities will now be able to invest in mutual funds. Even the term for investment in infrastructure is being rationalized. To make all this possible, the government will be issuing fresh guidelines under FEMA to legalize the new measures. All right, let's cut across right now. My colleague Mayur Jha reporting on that story. Mayur, it was expected that the finance minister's parting shot would be an economic booster, and one of those coming in forth right now.
Absolutely. In fact, these specific announcements that have been made, these are exactly what Headline Today had reported earlier in the day, and also on the day that Reserve Bank announced its last credit policy. We had said that what the central bank is thinking in terms of easing the financial liquidity position in the market is that they may allow external commercial borrowings for the infrastructure sector and the manufacturing sector. This is exactly what Headline Today had said is going to happen on the day that credit policy was announced, and this has been officially announced by the Reserve Bank now. So it does help the real estate and infrastructure companies get an easier access to money. The biggest challenge that there is that they don't have easy access to money because of the liquidity crisis that has been created because of interest rates remaining very hard. So with EC dollar loans really are always cheaper than rupee loans. So this comes as some relief to companies in these sectors, and definitely this will help in bettering the overall mood on the street. Apart from that, however, no, this is not a big booster per se, and we do expect that some big boost to the economy on the reforms front could only be announced now once the government is over with the presidential election.
Also, Mayur, if you look back now, this move clearly seems to be etched on the blueprint which was put forth by the Prime Minister some time back.
Exactly. In fact, easing capital is capital is come across as the biggest challenge to companies in all the sectors today, Priti. So the Prime Minister wanted to ease capital. Now the government first said that RBI itself eases capital by lowering rates. RBI said that considering the larger inflation scenario, that is not possible. So the one way of easing capital is now that give these companies access to foreign capital, which will be available to them at cheaper interest rates. The other thing that has been done, Priti, is that the government has tried to, the government is now trying to tap the NRI wealth and bring it back into the country. This was last time around, Priti, right in the year 2009. It was a very successful experiment. The government had a bond series called the India Millennium Bond. That was a very successful bond series where the government specific incentives to the NRIs to invest in Indian bond market. So that has been done once again, and we do expect that FIIs and NRIs will participate heavily in this series. But lastly, that does not solve the larger problems and issues and concerns that are being faced by the Indian market at this point in time, which only be done by taking some emboldened reform measures like allowing FDI in sectors like retail and insurance. That has not come across, and that we understand from sources is that is something which the government will be doing once it's over with the presidential election.